At Applied Math. It seems like a good time of year to start looking at taxes. The filing deadline is April 15th, and most of you, if you have a job, have probably already gotten your W-2 form by now, which tells you how much you made last year. So uh, most of us don't make enough and slash we get enough withheld that we actually get a refund. So the government owes us money. And we'll talk more about how to calculate that later. But for now, we're going to take a look at tax tables. But I just wanted to kind of mention that it's a good thing to file your taxes. For one thing, it's illegal not to. So, you don't want the IRS coming after you. But the other thing is, like I mentioned, most of the time you have withheld too much money and the government is going to owe you money. So let's take a look at the government. So all the forms that I'm getting today come from irs.gov. So everything that you need to know on your taxes is on this website, an official website of the United States government. So make sure you're going to irs.gov and not any .com or .net or anything like that. But if you scroll down here, you've got forms and instructions for filing your taxes. Most of these you will never use. So what we're going to use is Form 1040, and then there are instructions for Form 1040, but there are lots of other schedules. So say you win prize or award money, you go on a game show, then you need to use Schedule 1. If you're self-employed, you might need to use Schedule 2. If you have like foreign income, you might need to use Schedule 3. And actually, if we hit back here and go to other schedules, there are a ton of them. And most of them you're never going to actually use. If you just have a normal job like I do, like capital gains and losses from the stock market, I don't have any of those. Supplemental income, earned income credit, some of you might be eligible for. We'll talk more about that later. Farming, I'm not a farmer, so I don't use that. But there's all kinds of stuff. So let's look at the actual Form 1040, which I got off irs.gov. This is the 2020 form. It is the year 2021, but we're filing taxes for the money that we made in 2020. So it is the 2020 form. And this is an intimidating form. So there is a lot of stuff going on here. And we're going to talk later about kind of line by line how to fill all this out. But there's a lot of lines. This is why people get scared of filing taxes. And if you go to the instructions thinking, okay, that might help, well, the instructions are 112 pages this year. So we go up here, instructions for the 1040. It's a lot. It's a whole lot. But like I said, most of these forms you will never actually use. So that means most of these instructions are not applicable to you. So just try to keep a calm head and only go line by line on what you need. And today what we're going to look at is we are going to look at tax tables and tax worksheets. So this is actually more towards the end of filing, but it's where the money comes in, so it seems like a good place to start. Starting at the end, it's a little bit weird. So once you fill out most of the Form 1040, you're going to have a taxable income. So the taxable income is not going to be exactly what you made because there's things like deductions and exemptions, but it's going to be what the IRS is going to tax you on. And what we're going to look at today is how to calculate how much tax the IRS is going to take from you based on that taxable income. And it's honestly not that bad if you know where to look. So let's look at a couple example problems. So first one, Ron is single. After completing all of 1040, or most of the Form 1040, he calculates his taxable income is $51,482. If you are under $100,000 income, the instructions are going to tell you to use the tax table to determine your taxes. So let's figure out how much does Ron owe in taxes. So here's how we do this. We go to the instructions here, and if you're using the PDF, then it's actually kind of nice because you can go to 2020 tax table and click on this page 66 right here. And we click on that and we look for our income. So if your income was between $1,000 and $2,000, you're on this table right here. If you're between $2,000 and $3,000, you're on this table right here. Well, Ron was between $51,000 and $52,000, so we're going to have to scroll down a bit here. Okay, so Ron here is in the $51,000 income range. So let's zoom in on this a little bit. So there are 4 different options here, and they look like this. If you're single, there's one tax column. If you're married filing jointly, there's another one. If you're married filing separately, there's another one, or head of a household, there's another one. These last 2 are a little bit more rare. Usually you're either going to be single or married filing jointly. There are cases where the money works out where you want to be married file separately, or you've got some kind of household situation where you want to be filing as a head of a household, but for the vast majority of people, you're in one of these first 2 columns, depending on if you're married or not. Okay, so let's go back and look at Ron's income again, and notice here, we've got these $50 increments where we want to be in between those. So we're going to write Ron's income as a compound inequality. So Ron's income is greater than or equal to $51,450, but less than $51,500. So this is the $50 range that we're in, and this is how the tax table is set up, with a less than or equal to the first amount and strictly less than the second amount. So if Ron made exactly $51,500, he'd be bumped up one more. So we want to look at what he's less than, and he's less than $51,500. So we're going to go in here and let's maybe even zoom in a little bit more. And we see that $51,500 is right here. So we are less than this amount. This is our range, $51,450 to $51,500. Ron is single, so that's the first column. So that means that his tax that he's owed, and some of this would have been withheld from his paychecks already, but his tax owed is $7,115. And that's what we got here. So Ron owes 2020 taxes in the amount of $7,115, and we just looked that up straight off the table. Okay, let's look at another example here. We're making a little bit more money. So Maria and Don are married filing jointly. Their combined income is $153,900. They would like to use Schedule Y1 to estimate their tax. How much is their tax liability going to be? So if you make a little bit more money, then you have to use different schedules, different worksheets if you're making more than that $100,000. The Schedule Y1 that we're going to look at is not the official worksheet, but it does give you a good amount where you can kind of estimate how much in taxes you're going to owe. So you've maybe figured that out in like January or February, so you can save that money if you need to pay in April. So let's look at this Schedule Y1 here. It's on Form W4S, and I've already zoomed in to the one that we want. So we're using Schedule Y1 because we're married filing jointly. And we're going to look at our estimated tax income. So we're looking over $80,250, but not over $171,050. So again, we can write that as a compound inequality here, where we're in between $80,250 and $171,050, and that tells us what row we want to use on this schedule. So on the schedule, it says if we're in between this range, then our tax, essentially this is a function, we pay $9,235 plus 22% of the amount over 80,250. So what this does is it says basically how this breaks down is if you make exactly $80,250, this is going to be your tax. And they got this from these first two columns here. Remember from the video we watched that there are different marginal tax rates. So you pay 10% on this first chunk. Then you pay 12% on this second chunk. And then Don and Maria are up into this third chunk where they have to pay 22%. But they only pay the 22% on the money in between these two numbers. They don't have to pay 22% on the entire thing. And this function is a way to figure that out. So we're going to look at $9,235 plus 22% of the amount over $80,250, and we can find that just by subtracting here. And that's something that you can punch directly into your calculator. So once we do that, we see that their tax will be $25,438. Let's use the tax worksheet instead. That Schedule Y1 is a really good estimate, and it's going to be right on the money most of the time, but there can be some things that change that we want to get an exact number using the tax worksheet, and this number is what the IRS computers use. So we're going to look at Don and Maria again. The tax worksheet is directly after the tax tables in the instruction manual, and we want to use this worksheet to calculate that money that they owe. So we'll go here to our 1040 instructions again, and this is the tax computation worksheet on page 78. Don and Maria are married filing jointly. So let's zoom in here to section B, and then it wants us to complete the row that applies to them. Well, they made at least $100,000, but not more than $171,050. So remember, they made $153,900. So from here, we're just going to follow the instructions. We're going to put in the amount. If I was actually like writing on this, I'd put in that $153,900 right here and multiply it by 22%. So column C wants us to put in that number. So let's go ahead and do that first. So we're going to multiply that 153,900 times 22%, and in column C there we would put in $33,858. So $33,858, and then it says we've got a subtraction amount in column D. So in column E here, this is our tax. We subtract D from C, and then we put the result here, and also we put that result on our actual 1040 that we are going to send to the IRS. So we subtract that $8,420, and we get that their tax liability is $25,438, which is exactly what we found on Schedule Y1. All right, so that's all for this. Your assignment's going to be basically looking up some numbers and getting comfortable with how to actually use this tax table and these tax worksheets. And then as we move on, we'll look at the rest of the 1040, how to fill it out, how to get the deductions out of it that you need, and all kinds of fun tax stuff. So I will see you in class next time.